Saving money on taxes always sounds like an amazing idea, doesn't it? Well, there's a couple proposals out there, and it's really talking about saving the average homeowner money on capital gains taxes when selling their home. So, interestingly, in 1997, the rules were put in for primary homes. So, this is not for investors, this is not for landlords. This is a primary home that you've lived in for 2 of the last 5 years. So, you may have moved and rented it for a little bit, but you had to live in it for 2 of the last 5 years. And the exemption was that you get a $250,000 write-off on any gains as an individual or $500,000 as a married couple. Now, that was 1997. I mean, we're talking nearly 30 years ago now, and nothing has changed since. However, we've seen the prices of homes go up dramatically. And as those go up, well, then it's quicker to get the gains, right? 4% on 100,000 is only $4,000 on an annual gain. However, 4% on 500,000 is 20,000. So to break through those caps is a lot easier now than it was back then, and there's no change. However, there are some proposals out there. Representative Greg Goldman in Texas has proposed that we eliminate capital gains tax altogether on primary residences. Now, that means that if you bought a home and it was $500,000 and you're selling it however many years later, let's say 30 years later, and it's $1.3 million, you don't pay tax on that $800,000 in gain. Now, why would that make sense? That would make sense very simply because it's just inflation. When you bought the home for $500,000, that money, if you didn't buy the home, would have gone to, let's say, gas and bread and other items at this level of pricing. Well, when you sell it now at 1.3 million, a lot of those prices have gone up too. So it's only actually getting you that much more. So if you're taxed on it, you may actually end up in a position where you're below the dollars based on how inflation has worked. So it really seems like a great proposal. Now, what will it do to tax revenue in the US? Not quite sure. And again, if you're an investor, that doesn't apply. So you're still going to pay taxes on the gains because it was investment, just like if you put money into stocks or any other investment that might be out there that is subject to taxes. This proposal was also put into place by another representative out of Georgia a couple years ago and still hasn't advanced in committee. So we'll see what has to come. However, this may free up the ability for some people to actually move out of their current home and right size or make the changes that they want to make in life, but they didn't want to do it because they knew it was going to be costly to do so. So we could see some momentum created in the markets if a bill like this that's proposed does move forward and pass. That's your daily deal, and we'll see you tomorrow.